Sri Lanka is on a well-defined path of development. At today's Investor Forum, held under the theme, Pushing the Pace in a Resurgent Sri Lanka, we hope to present to you facts and figures of NDB Group's financial performance for the year 2014. To kickstart this discussion, may I now invite NDB CEO Mr. Rajendra Tyagaraja to present to you bank's strategy and the way forward with macro-level insights to the financial performance of the NDB Group.
Good afternoon, ladies and gentlemen. On behalf of the board and management of the National Development Bank, it gives me great pleasure in welcoming every one of you to this Investor Forum. We have, over the last few years, progressively improved and perfected this particular aspect of engagement with your community, the fund manager, the analysts, and the broker community, to make sure that timely and relevant information is given to you on a regular basis, regardless of whether times are good or not so good, whether there is liquidity in the stock or not there, to make sure that the story is consistent, relevant, and timely. Today, we have concluded publishing a 12-month cycle of performance for 2014, and it's time to briefly look back on the year and engage with you and give you the opportunity to engage with the management and the two representatives from the board, my chairman Suril Vijay Singh and myself, to clarify and enhance your understanding of the story and the direction in which this bank is taking over the next few years. Perhaps initially on the business model itself, the bank's business model impinges on a series of pillars, effectively 7 pillars, where we actually have a roof, a very strong foundation, which is the balance sheet of the bank, which believes in growing but growing profitably. That is the foundation, and it is given shelter with a triple impact of a GCR framework, which talks about the best-in-class governance, compliance, and risk management framework, which protects the business model. So I think those are two very important foundations based on which the other 5 pillars of operational excellence, to make sure that we keep on drilling down and further improve the degree of efficiency, which I think is quite evident in this year's numbers in terms of a cost-to-income KPI, which has shown almost 800 basis points reduction, as Osman will share later on. An extremely strong sales culture, which is again impinged or represented by one of the best-in-class sales forces in this industry in Sri Lanka, which has also given a renewed sense of burst in the space of retail banking, which we will touch on a bit later on. The growth in fee-based income, not just one or two sources, and this is very relevant in an environment of declining and shrinking margins. So this would be again the continuum for 2015 and onwards in this space, which will be a very essential driver in defending the profit aspirations in a diminishing margin environment. The cost optimization, yes, an indication of efficiency. I think as a bank as a whole, we don't believe in what we call cutting costs. I think we have always believed in managing costs and making sure that for every rupee which is spent, it is spent intelligently with the value or objective of realizing value greater than the rupees spent. And I think that's where we would like to call it management of costs rather than cutting of costs. And then also the story. there is capital, there is systems, but at the end of the day, this industry is, and in my belief, will always continue to be a people-centric industry, and the performance will be as good as the quality of the people who are there. So a question of engaging, retaining, and motivating a strongly engaged force of people. So this is the broad philosophy in which we operate. The basic value system of personal integrity, business integrity, caring for customers and the stakeholders, performing with passion, whatever you do, engage with extreme passion, teamwork and service orientation are the basic values which have been enshrined, and this is something which we firmly and proudly believe that we continuously walk the talk and keep on reinventing the energy and the ability to walk the talk. Again, just to reiterate the strategy or the group structure of the group itself, it is a unique structure. Unlike some of our peers who also have similar structures, the core banking business of most of the peers tends to account for in excess of 95% or so of their group results. But I think this particular bank's structure is in such a manner that the non-banking aspect of the group plays an equally and a growing significantly important role, as important as the banking business. And those components are led and championed by the investment banking group led by Vajira Kulatilaka. And they've had another extraordinary year this year. So I thought it's also very important that while we talk about the bank, to also showcase some of the things the Vajira's team have done. I think this year we have seen the birth of a private equity coming into this business model, and Sri Lanka, I think we are very proud to have what we think launched the true and the highest capitalized so far private equity proposition from a bank into this market. And why? Because we believe in the continuum from basic debt to an IPO-led solution. This particular private equity is a very important component in preparing the growing affluent SME sector to prepare itself before they get into IPOs. So I think there is a very important space where we feel we have a role to play. And the mandate of this private equity is not to really be focusing on listed equities. It is to truly partner unlisted ventures where you have as close as possible a story to the real economy, so that there is a touch and feel and there is a role to play for this capital. And hopefully this will be the first of many more funds which will be spinning off from the same model. The investment bank itself has also had a very interesting year, both in Sri Lanka and Bangladesh. In Bangladesh, I think we have managed to structure deals in excess of 100 million US, mainly in the power sector and also now in the steel and manufacturing sector, which gives a very firm footage to the business to further expand. And I think going forward, we will see an increased investment commitment from the group to Bangladesh to increase the coverage from basic investment banking, perhaps into wealth management and other asset management initiatives in the years to come. I think the first steps in terms of capital commitment have already been approved by the board. In terms of wealth management, I think we are extremely proud of our in-house story. I think Prabodhi is somewhere around here. The company has really outperformed itself and today exceeded 100 billion in assets under management, so it has stamped its dominance in this industry. And this, I think, is particularly relevant in an environment where we see two things happening. Progressively reducing interest rate environment, which is south of the 10% barrier, single digit, and secondly, a gradually rising affluence of middle class Sri Lanka. And I think we have realized as a group that the business model, depending on pure deposit offerings, will be a things of the past. So instead of letting deposit mobilization being cannibalized, we have given sponsorship to Prabodaya and the wealth management group to be a part of this group to make sure that the same group of affluent customers have more than one solution and is kept within the family. So I think that is a very clearly articulated strategy for us to retain and grow the pie within the group rather than focusing it only on the bank. A quick recap on the journey of the bank itself. Started way back in 1979, soon after the first wave of post-economic liberalization, as a thoroughbred development bank incorporated by a special act of parliament as a DFI. Chose to get out of the model somewhere in the early 2000s and flipped the model and came out as to be a commercial bank. Has been in the business of accepting deposits for just under 10 years, but within that 10 years has managed to improve its CASA from 0 to 25% in a 10-year period. And today has proudly chosen to reposition the business proposition of this bank as a premier development-oriented commercial bank. It will still be a commercial bank, but I think the USP for this bank is a strong development-oriented commercial bank, and by that, what we mean is development does not start with large-scale projects alone. It starts with you and me as an individual, looking at basic requirements of us as individuals, whether we are professionals, academics, entrepreneurs, office workers, it doesn't matter. Basic housing, affordable transport, cost-effective education, look at the basic needs, and tailoring retail propositions to meet basic individual needs, through which you start to develop small businesses and communities, and through that scale it up through the value chain to be a part of the nation's growth. So it's a very clear alignment to the nation's growth, development, but development-oriented commercial banking, the repositioning. In these 10 years, we have grown to 83 branches as at the end of last year. We are at 86 as at today, but we hope to cross 100 by December as part of an organic journey. Without the DFCC ongoing conversation, on our own we hope to cross 100 and increase the penetration outside the Western Province, because we see a huge and a growing retail proposition in that journey. So with those few initial thoughts on strategy and the business model, let me now invite Osman Faizan to take you through some of the numbers.
Thank you. On the top of the slide, you see the gross revenue. NDB's gross revenue for 2014 was 26.2 billion, which shows a 4% growth. But if you compare, the industry came down by 2%. And we all know the industry came down is basically because last year the interest rates came down by about 200 to 300 basis points. Operating expenses have been kept well under control. It went up by 6% at NDB, but industry, it's around 13%. And as I said, the profit for shareholders is up by 56%. Loans and advance up by 27% compared to the industry growth of 13%. Deposits of 151 billion is 17% up compared to industry growth of 12%. and our total asset base is 269, which is a 30% growth compared to the industry growth of 16%. Let me take you to the detailed P&L. What you see here is the net interest income grew by 13%, and the profits to shareholders up by 56%. And NDB was, in fact, incorporated in 1979, and for the first time in its history, we have passed the 4 billion profit mark. So this is the highest profit which we have made in NDB's history, a profit of 4 billion. Our cost-to-income ratio of 45.6% has come down from 50%. And I think this is an area where NDB has done extremely well. It's basically because, as CEO said earlier, it's not that we are cutting costs, it's how we manage costs internally. And you're all aware that a cost-to-income ratio of 45 is probably not the lowest, it's one of the lowest in the industry. And also the cost during the year went up by only 6% compared to the industry growth of around 13%. Growth over 2013, you see our operating income went up by 1.4 billion. Yes, operating costs went up by 347 million. Loans and advances, it went up by 39 billion. So that's almost 8% of the market growth. 8% of the market growth. Customer deposits went by 22 billion. We opened 5 new branches in 2014, and probably lower number of branches because we were in discussion with DFC for a possible merger. And today, this year we have already opened 3 branches. And they have 161 employees. And if you see this graph, the performance radar, you see the growth. And the gap between the expenses is lower. That's because it's only 6%, which is good news. Okay, let me take you to the balance sheet. The loans, as of last year, we had a market share of 4.12, and now we have a market share of 4.63. So NDB has grown its market share to 4.63, and hopefully this year we will exceed the 5%. Deposits, we were at 3.1. We have gained market share. We have moved ahead. Now it's 3.23. And total assets from 3.48, we have moved to 3.86. This is the balance sheet. You see there's total assets grew by 30%. And these charts show that our assets over the period of 5 years has gone up consistently, including the deposits. On the balance sheet, let me get into details of the customer loan growth. You see there is a growth of 28%, and that 28% is roughly around like 39 to 40 billion, which is almost 8% of the industry growth in 2014. And that growth mainly came from retail bank, which is almost 47% of the growth came from retail bank, 22% came from corporate, and the balance from project finance. If I go into, so basically it's about like 40 billion, 47% is about like 15 to 16 billion. And in terms of, if I break that 15 to 16%, the retail segment, SME book grew by almost 5.4 billion. Personal loans, we are doing very well. We have grown our book by 4.1 billion. Our leasing portfolio is up by 4.2 billion. Housing loans by 1.6 billion. On the bottom of the chart, you see our capital adequacy. At a group level, we are at 17.6, and our tier 1 is 12.9. So again, with the lower leverage, coupled with strong capitalization, it gives ample room for growth. Asset quality. I think this is one area where NDB takes pride traditionally, I would say, and that's basically because, as CEO explained, we have a very strong governance and a risk management structure. And given that our NPLs have always been below industry, as of 2014, it's 2.5 compared to market 4.2. The provision coverage, the industry is around like 35%, and we are at 50%. Sector-wise, you'll see we are very well diversified. We don't put all our eggs in one basket. We have concentration limits to various sectors, and you see the wheel is very well diversified. Deposits. The deposits grew by about like 22 billion during the year, which shows a growth of 17%, and that was supported because NDB had introduced various new products. This is something which the bank takes pride. It always comes with new products which is relevant and needed in the market. So out of the 22 billion, the CASA grew by around like 5 billion, and the balance was mainly the fixed deposits. Some of the key performance indicators: earnings per share, 25 rupees a share, 2014. From 16 we have moved to 25%. Book value 169, and the PE ratio is 9.95, and the price to book value is 1.48. Now what's interesting is the return to the shareholders from last year to this year is basically 63%. Last year when we started the journey, the share price was around like 160. When we ended the year, it's 250. And if you add the dividend, it moves to around like 63% return for the shareholders. Move on to the external recognition. We got several awards. The Banker for Financial Inclusion, and I am told that we are the only bank globally to have won this award last year. The Retail Bank Award for Excellence in Core Banking Technology. I think it's our technology also supports our performance, and we have one core banking system and it won an award. And the Banking and Finance Retail Award for 2014, Domestic Retail Bank of the Year. So these are some of the several awards which we won in 2014, and how the external market perceives about us. Well, with that, I had to say thank you, and I'll be opening the forum for questions. And if you want a copy of this presentation, if you go to our website, it is available if you go to this link, ndbbank.com.